Hi everybody, Alex Deploy here from Expert Forex, and in today's video we're going to be looking at a very simple and free two-rule Forex trading technique. And as you can see on the screen, it has provided some amazing trades. Also, as stated on this slide, it is incredibly simple. So there's no experience required. It is a total beginner system that answers all aspects of Forex trading on an ongoing basis. So let's have a look at the system. Very simply, it uses two rules. It says enter on a trend line violation, and then exit on a special moving average crossover. And I'll explain that rule in a little bit more detail. So here are the settings for this very special moving average. It basically uses a period of 4, but the trick here is that you have to shift it forward by 4 at the same time. And you can use a simple moving average based on the close, and those are the main settings for this particular moving average. So I'll explain the system with using some live examples that occurred recently. Now, the beauty of the system is it answers all your trading questions. It says when to enter, tells you the direction of the trade, it tells you exactly where to put your stop and how to protect your gains, and when to exit. So let's explain the entry. The entry is basically enter on a trend line violation. So on your screen here, you can see a trend line coming up. The price has gone through the trend line. It has closed. So you have to enter when the candle has closed over the trend line. And obviously, this is where you enter. This is when you enter, and the direction is based on the violation, so that would be a downward trade. Let's have a look at the next aspect. So the next aspect says exit when the price closes over that magic moving average that we spoke about earlier. And here you can see there's the exit that we took as a result of that particular setup, and it went all over the show. It never crossed this moving average, and down it went. It never closed outside of the moving, and there on that blue candle there, that was when it closed on the other side of the moving average, and you would get out. And that trade resulted in a 140 pip gain. So let's have a look at this. The moving average firstly provides you where you should be putting your stop. So there is your stop, and what's great about it, it's like a following stop. The moving average starts moving down and down as the trade goes on. So this is like having a trailing stop, an automated trailing stop, and then when the price eventually closes over the moving average, you exit. So it's an all-in-one, very simple trading system. So let's have a look at another example. So here's another trend line violation. The price has moved over. It has closed on the other side of the trend line, so that means we would now is the time to trade. It is in a buy direction because the price is moving upwards, and let's have a look at the result. And here we go. So we stay in the trade as long as the price does not close over this moving average, and then eventually it closed there, and that was for a 110 pip gain. Beautiful trade, so simple. Two things to worry about: the trend line violation and then the moving average crossover. And that's how simple this particular system is. And look at the amazing gains that can be made. A trend line merely joins the turning points in the market as shown on over here. So trend lines are easy to draw, and the moving average, once you've put it on your charts, is very easy to see. Now the beauty is that some of our traders have a moving average crossover EA that basically means they don't have to watch the charts all the time and wait for it to cross over the moving average and then close the deal. The EA will do that for them, and that EA is currently being privately used by our traders. If you are interested in that type of EA, please let me know, and I will make that available on a commercial basis. Okay, so here's another setup, another trend line violation, almost the same as the previous one. This one is for the euro, and it's on the daily chart. So you can trade this technique on any time frame, daily, 4 hour, 1 hour, 15 minutes, whatever you wish, and which makes it a fantastic scalping technique at the same time. So here we go, we've got our trend line violation. There it is, the direction is up and the violation has taken place. So let's have a look at the result that's happened here. And at the moment, the price has still not crossed this moving average. So we have to wait. There is no outcome at the moment. It is, however, 330 pips up. So you have to decide, are you going to wait for the moving average to cross over, or are you going to cash in straight? But that's a fantastic gain on the euro there, and it shows you the principles of this particular technique. So what you now need to do is you need to go back to your historical charts, draw trend lines, put in that magic moving average, and find fantastic trades that you could have made using this principle. Don't only use one time frame, use a varied number of time frames, like the 1 hour. Do a few reviews of the 1 hour charts, do a few reviews of the 4 hour charts, the daily charts, and use numerous currencies, and you'll see that this technique has so many benefits on so many time frames and on so many currencies. So just to summarize again, this is an incredibly simple technique. All you do is you enter on the trend line violation and you exit using the special moving average crossover. Extremely simple technique for the most basic beginner. I hope you've enjoyed this video, and if you do have any comments or remarks, please make them in the facilities provided by YouTube. If you are interested in us making the EA available that will trade the moving average crossover without you having to watch the trade all the time, please let me know about that too. So from me, Alex Deploy, cheerio.
Yeah.